A surety bond is not insurance. Understanding this will help you be better prepared to buy a bond when you need one. Let's get into it. First, we need to know what a surety bond is. A bond is a contract between three parties, where one party promises to pay a loss caused by a second party who's performing a specific act or service for the third party. Basically, imagine a small business collecting, say, a specialty tax like liquor or tobacco, or a used auto dealer complying with state law regarding how a financial transaction is required to be filed. A state may ask for a bond to guarantee the way those transactions are handled and to pay the resulting financial obligations if they're not handled properly. A small business being one party, the insurance company providing the guarantee or surety would be the second party, and the state would be the third party. This is why people tend to get confused about surety bonds, because it's insurance companies that act as sureties for the bonds, but there's one fundamental difference. With insurance, if you have a covered loss, the company pays the claim, and that's the end of the transaction. With a surety bond, the first party, usually called the principal, is required to pay back or indemnify the surety or the insurance company for any covered loss. This means if the insurance company has to pay because the bond contract was triggered, they will come back to the small business to get reimbursed for the money paid out on their behalf. The bond is just a guarantee of payment, not insurance. The reason for this is because losses on bonds are completely avoidable. Surety bond contracts are financial guarantees that an entity, business or individual, is going to perform an action in a way that they've contractually agreed to. So you only have to do what you agreed to in order to avoid a loss. Unlike insurance that's intended to provide coverage for unpredictable losses. So how does this help you when you need to buy a surety bond? Well, one way is that if you understand that the money has to be paid back, then you know why credit is such an important part of buying a bond. Insurance companies don't just look at the possibility of having to pay a bond loss. They also look at the ability of the small business to pay the bond back. This isn't just based on your credit score like a credit card or mortgage that gets paid over a long period of time. This is looking for your ability to pay the company back in one lump sum or a short period of time. Another way understanding this helps is that while you're setting up your business, you can be better prepared for the process of purchasing a bond by understanding the creditworthiness of all the business owners or partners, and sometimes even their spouses. Some insurance companies require a personal guarantee of indemnification. This is another way of saying that the company will require the owners to pay the bond back as individuals even if the business fails. So they will not just consider the business financials and credit, but the financials and credit of the owners and their spouses. Whether you're needing a license and permit bond, a contract bond for construction, a motor vehicle dealer bond, or an import and export bond, understanding that a surety bond is not insurance and how credit plays a big role in the cost and eligibility for the bond will help you make better decisions for your business. Remember, not all insurance or bonds are created equal. This is a general explanation of the definitions and terms. You should see your insurance policy or bond contract for its exact terms and definitions. Talk to your trusted insurance advisor. That's what we're here for. We're here to answer your questions. If you don't have one or you'd like a second opinion, feel free to reach out to us at www.dopazoinsurance.com. There you can chat with us, give us a call, or complete one of our online forms so we can help and work on a quote for you. There we have so many different ways of getting in contact with us, and we'll be glad to help you in any way we can. If you like this video, give it a like, and if you think the information is useful, share it with someone who you think might need it. It would also be a really great help if you hit that subscribe button. You will get notified for future videos. We do a lot of insurance videos, but we also have a little bit of fun. In the meantime, if you have any questions that you'd like me to answer in a video, please ask me in the comments. And it would be my pleasure to try to make a video to help you better understand insurance.